I like it.
Okay. I think we're good. Okay.
I think we're good. Yep.
Welcome, everybody. It is November 12th, 4:15 p.m. I'm Scott. This is Ben over
Hello.
here. We've met before. Ben, another week just ripped by.
It's true.
Shortened week for the banking community.
Not for us, but yes.
Hey, Remembrance Day, not for the Hart Investment Group. We're 24/7, right? Well,
Yeah.
I haven't really done the math, but let's just call it 24/7.
Yes.
So, is it typically busy in a week where it's shortened week, or like a lot of people
Canada's
trading, or what?
such a small part of the trading world that it's a pretty non-event when Canada shuts down.
Yeah.
US was a bit lighter yesterday. It's still Veterans Day in the US. It's a
Mhm.
Veterans Day and November 11th. But yeah, it's pretty regular day from a market perspective this week. I'd say pretty regular market week. I think maybe there was some hope that they'd have an announcement on Powell, but that didn't happen yet. And Danielle DiMartino Booth, who's a former Fed insider, has said, we need to get this resolved. We need a name. We need somebody that at least we know who's in the chair so we can make decisions around that.
Right.
So I think that caused, some more uncertainty than the shortened week.
Gotcha. We were talking before this too that we noticed some of these big behemoth companies that have been around for a long, long time are starting to split up. We noticed Johnson & Johnson was the latest to announce, and GE had also talked about one of the headlines I read was like unwinding Walsh's doing or something like that, right?
Sure. Yeah.
So I guess it's time for these guys to make moves, right?
Yeah, I think the market just wants a little bit of clarity on what they're going to be and who they are and the different business lines. The conglomerates don't seem to work as well anymore, and so I think that the different companies are just trying to split out so people can decide I'm going to invest in water or I'm going to invest in turbines or things like that. So I think the market's trying to decide on that. And I heard somebody today say that Johnson & Johnson is going to split up, and they wondered what the name of the new companies are going to be.
A little conglomerate joke there. I like it. You don't see those very often.
No, you don't.
So do you think it's that, or do you think it's just like the old school conglomerates, right? You're seeing like Alphabet, which is Google. You're seeing Facebook now positioning itself to really be a conglomerate because it kind of already is by changing its name to Meta.
Yeah.
So is it really just kind of the old business structure trying to maybe re-identify itself, I guess?
Maybe. I mean, with GE, there's so much legacy garbage in there. I think that probably if I were CEO too, I'd be like, let's just clean up the business lines and not obviously go through bankruptcy, but let's clean up and put the junk over here. Let's clarify, because they're doing a lot of good things. They have some interesting businesses and certainly some current businesses. But I think that they're just saying, let's just let people have a better decision on that. Johnson & Johnson, they've had their troubles there with the baby powder. There's been this forever going case against them. I think they paid $1 billion or so in fines for the talcum powder because there was some chemicals in it that caused babies to get sick, and so they've been paying out fines forever on this. I think they're again trying to get some of this legacy overhang out of their current purview so people can see them a little bit better and what they're doing and what they're thinking about going forward.
Gotcha.
Toshiba was the other one. They're trying to split up into different business lines. Yeah.
Right.
Yeah.
Interesting.
Mm-hmm.
All right, let's get into more specifics, Ben. Let's get some specifics about what you really got up to for the clients this week.
Well, before we do that, I do
Oh,
just want to say thank you to all the clients, because it is coming up on our 1 year anniversary tomorrow since the move. So just wanted to say
already?
yes, thank you to everyone that's stuck with us. We've had our road bumps and fits and starts as we're working to continue to get better, but it's been 1 year tomorrow. So thanks for sticking with us. I appreciate you, and we certainly appreciate your patience with us. So before we go on, so I guess from a what does the world care about? Like I've been saying in kind of most of my dailies, most of my conversations, people are saying, what the heck's going on with inflation? So everybody wants to talk about inflation. And that's stealing a lot of the attention. So some days as I read these things, I think, is this truly going to be here to stay? Is this going to be like the 70s? Um, but at the same time, having gone through a lot of cycles, as you get into one side of the boat so heavily focused on one thing, it's typically the other thing that you should start to be worried about. So yeah, we got inflation. We probably have elevated inflation for a period of time, but at some point we're going to start to see those numbers peak, and I'd say probably soonish. I don't think we go back to like 0% anytime soon, but I think we start to rate of change start to move lower from an inflation perspective soonish. Darius Dale just came out with his new deck, his scouting playbook, which is a 150-page quarterly review that I'm starting to look at. And some of his comments are maybe we are like the 70s. And if we are like the 70s, then maybe you want to have that crypto allocation, which we've talked about, where historically you just wanted to have gold and commodities if we get that kind of 70s type inflation. So I'm not sure is the answer, but I continue to follow it and track it pretty closely. And it seems to be on everyone's radar right now. Get a lot of commentary around you should buy inflation linked bonds and things like that. Yeah, I disagree with that. You probably missed most of that trade. So I think at this point you say, how do we position for what's ahead? And what's ahead, I believe, is declining rate of change of inflation, but one day at a time right now. So that's a lot of the focus. From what did I do? I guess this
Gotcha.
week was a few additions. Pure Cycle, which is one of the companies that we own, is a plastic company. They are a company that recycles plastic, and presently, right now, only 1% of plastic in the world gets recycled. So that's a huge potential upside market. So
Mm,
they take plastic, melt it down into kind of a resin, and then recycle it and turn it back into reusable plastic. And so, interesting American company. They've got one facility in place, and they have a second one that they just acquired the land on. They're looking to expand into Europe as well. So we own that stock. It came down a little bit this week, so I added to that position. The other one was PayPal. They had missed earnings, so it took the chance to add to that position as well. I do think if we look back, PayPal is probably one of the future banks of the world. So it's an opportunity to just look at it and say, let's take advantage of the market kind of mispricing it short term.
gotcha.
Yep.
Okay. So is it time
Is it time for the charts?
for the charts? Everyone's favorite
Right.
segment, bed charts.
I think it's
Bust them
probably,
out. What do you got for us? Now remember,
yeah.
we typically like to build and get better with each chart. How many charts
Yes,
do we have today, Ben?
we have 3 as per usual.
All right.
As per usual, I'm trying to stick with that 3 number. I think it seems to work well for everybody.
Great.
Yeah. All right. So let me know. Let me know when you can see it. Can you see the
Good.
velocity of money?
I can. I can.
Super boring chart. So I thought I'd start it off and build up, but we've talked about this a few times. It's definitely been a lot in a lot of my presentations. If you follow Gary Schilling and Lacey Hunt and some of these kind of longer term economists that talk about this kind of money supply, this is always in their presentations. But we got M2 money versus the velocity of money, and M2 money is all of the all of the kind of central banks, savings, kind of everything. It's all, we'll call it the cash in the system. And so what you see obviously on the chart is that blue line. What you see a dramatic increase in the quantity of money. But on the red line, which is probably the more important line from a long-term economic perspective, is the velocity of money. So that's the amount of money coming into the system, buying and selling, trading goods, and kind of the speed at which that cash goes into the economy. And so what you need for long-term sustainability without continuing pump by the central banks is you need that velocity to go up. So as you see, if you look at that red chart and you kind of look through, the 90s through the 2000s there, you saw the velocity of money increasing. Household formations, all these things, like we were in a growth phase of the world cycle. And so since kind of 2008, the velocity of money has cratered as central banks have kind of put the foot on the gas from a quantitative easing rates perspective. So, this isn't a good thing from a long-term sustainability. We need to see that velocity of money start to pick up and see cash coming into the system in order for the economy to be super healthy long-term.
Gotcha.
Make sense?
Yeah, that wasn't boring. Yeah, interesting.
Yeah, good. So the next one is small option trader betting. So this is, I think it was Jim Bianca. He does a lot of great research. And so it's interesting because this year there start to be a lot more attention towards breaking it out between institutions versus smaller betting, we'll say, so to speak. And historically, you've had kind of exclusively institutional individuals in the option market, where you get this commercial positioning report every week that people look at, and I still do as well. But with the advent of Robinhood and some of the others really taking center stage this year, is you've had a lot more focus around what the small investors are doing. And so it's an interesting sentiment check that I like to look at, which I came across today. And so we get kind of max positioning right now from a small individuals being bullish equities. So what it would mean to me is that it would mean put options are super cheap when this is tilted one way towards bullishness. The other side of that trade is super cheap. So it's an interesting sentiment gauge to pay attention to. Again, it's one of the many things you look at, but I thought this was an interesting one to continue to track.
Good one.
Yeah.
The
Save
big
the best for
finish.
last for you. Best for last for you.
Good.
Which is crypto. So for anyone that's been kind of following along, Bitcoin for the first time passed a $3 trillion market cap this week. So that's 3 trillion with a T. So it's certainly going in that direction where you're getting a lot of mainstream integration. We saw the first ETF launch this a couple of weeks ago. It's been getting quite a bit of fund flows. VanEck tried to launch a spot ETF this week, which was denied by the SEC. So it'll be interesting to see if they come back with that same version. But a couple of things happened this week, and just trying to look at fund flows and see where the money's going presently. And so this is a reasonable breakdown. Grayscale, which is GBTC, which is an over-the-counter ETF in the US, still gets the majority of fund flows because it's been around for a long time. And so there's a lot of volume associated with it. ProShares, which is American ETF provider, Purpose, which is a Canadian, and they were the first to launch ETH ETF and Bitcoin ETF, and 3iQ, which was the original, which we'd bought for clients in May of 20. And so still, it's interesting to see where the flows are going. Well, why this matters is the more flows into the bigger ones is going to bring the fees down, so it's going to make it cheaper, and that'll be a benefit for clients. So interesting to continue to watch this. And then the last piece, for anyone that's been following Bitcoin for a long time, in 2014, everyone talks about this Mt. Gox kind of scandal where 850,000 Bitcoin were stolen from the company that was working on it. They were supposed to be custodying this 850,000. What happened is they ended up a big long court case in Japan. 200,000 of those coins were retrieved and taken back. And so, it's one of those things where those people who own those coins, they're going to get a heck of a lot more money back, even though it's a smaller amount, because Bitcoin has gone from where it was in 2014 to an all-time high today. So this long drag out that's been going through the court system has actually benefited the shareholders, and they're going to get back more money than they ever thought they would. So interesting to see how this has played out.
Very interesting.
Yeah.
And you're right. You save the best for last. Hey, Ben's charts never disappoints.
That's it. It's the last one. Yep.
Good stuff. All right.
Yeah.
Where do you want to go next?
Yeah, I think that there wasn't too much more I had to go on here. I know we both had watched an interview with Mark Zuckerberg talking about the metaverse and his plans and how he sees that playing out. It's interesting to see their views on AR and VR. Certainly he's thinking way down the road. And Facebook or Metaverse or Meta continues to put a pile of money each year into developing that. And, the number that surprised me was that they put $10 billion a year into VR right now, which is a huge spend on the future of where they're going. I thought that was pretty interesting.
Yeah, was it 10 billion in VR or was it 10 billion into the metaverse?
I thought it was Oculus that he'd said.
Right.
That,
okay.
which,
Yeah, looks like that's going to be the big play for sure for Facebook. All right.
Yeah.
For a long time.
Yeah.
Okay, we didn't ask for any questions, but if there are any, I think pretty much everybody on here is a regular, so you know how to do that. If not, scroll down on the bottom. There's a Q&A button. All right, anything you want to wrap up with as far as what are you looking at for next week?
Yeah, so I'm optimistic that Biden finally does announce the new Fed chair. Well, I don't think it's going to change the direction of anything, but this continued added uncertainty just tends to drag on. If he's going to pick Powell, fine. If he's going to pick Brainerd, fine. If it's going to be a third person, we don't know who they are, fine. But let's get this out of the way so that the market can decide who and what that's going to be next. From a flows perspective, it continued to look like we're seeing a little bit of increasing growth and inflation. So continue to stick with that. I mentioned in one of the dailies this week just about some of these topping signals where we saw, one of the more bearish hedge fund managers of all time decide to pack it in. These tend to be types of events that happen at the end of cycles. We saw a number of big hedge funds go down in 99, 2000, right at the top, thinking that they didn't know what they were doing anymore. And they exited the business near the end of the cycle. So these are signals that I continue to watch, and where I think short term there's money to be made. Over the next couple of quarters, there's definitely caution flags.
Good stuff. Hey, we haven't heard about the quads in a while. So I'm on quad watch here. What quad are we looking at right now?
Yeah, so we're in the quad 2 phase right now. But I think, as I mentioned a previous couple of calls, that every economic setup is slightly different, and so we saw a pretty deep quad 2 in Q2 of this year. We're not seeing it as deep a quad 2 this time, and so you don't see as pronounced the moves that you might have seen in Q2 of this year. And so where there was tremendous shorting opportunities in certain areas, with gold being one of those, right now that's not playing out this way. You're seeing gold pretty stable through this environment, and but the one thing that is similar is you're seeing small caps do well again. Some of the consumer discretionary names are starting to perk up again. So each environment's a little bit different. And this one's a little bit more shallow, so closer to the middle, but certainly still in that quad 2, with the view that we likely go into to a quad 4 environment in Q2.
Got it.
Yep.
Okay, well, I think that's it. No questions here for today, so we'll button this up, send out the recording so you guys can watch it over and over. And any big plans for the weekend?
Sports, and sports. You?
I hear you. Yep, same thing. We live the exact same life,
That's it.
just 6 kilometers apart.
That's it.
Yeah. All right, everybody. Have a fantastic weekend, and we'll see you next week.
Thanks very much. Take care.